Candlesticks and bar by bar. Let's continue. Let's become a candlestick master here. Well, proper trading is said to be proper thinking. But how do we know what to think? Well, it's about pattern recognition, which is nothing more than a recurring arrangement of price bars. We recognize those patterns from the past. We know what they did in the past, which suggests the future movement of prices. This guides our thoughts. So these patterns communicate to us how other traders have acted, what they've done. They've placed their bets with real money, and it's there for us to see on our screen. It tells us what their beliefs are, what their expectations are. And it tells us that in the moment. Each candle provides us a picture of those expectations on an ongoing basis. This is the premise of bar by bar analysis. As we put those pictures together, they speak to us in what I like to call candle language. They provide our continuous thoughts and trading decisions, but only after we put this together with the other master trader concepts. Now, we've talked about indicators. I said they're not going to increase the reliability of candles. It's a foolish concept, but I know it's widely taught of combining Eastern and Western techniques. Indicators are not going to increase the reliability, and we've talked about that, and I'll show you in these upcoming slides. So here are the various names. I believe that there are more than these, and many will spend hours memorizing these names. What a waste of time, as you'll see. We're not going to spend time knowing names. They're irrelevant to us. I'll cover a few of them that are widely known, and you probably know them already. However, this is not the point of view that we come from when we look at candlesticks as a master trader. So here are some of the common names. A bullish hammer, ram eyes, thrust, piercing patterns, engulfing, shooting stars, and such. And of course, there are all the bearish variations by just turning these upside down. The essence of all is about whether momentum is slowing, whether it's reversing, or whether it's increasing. And as we go through each of these, as we can, is the hammer. And what we think about, what does it mean? As prices have already been going down, they move to the downside, and they just reverse back up again. That's a good signal. The Haramai, well, it opened near the prior bar's close, it fell, it says it rose during the day, or it could be a 5-minute chart intraday, and it smolds with a small candle body. This tells us that momentum is slowing down. It doesn't mean it's reversed, not yet. And the bullish thrust, well, it just means it went lower and it moved back up into the prior candle, but less than halfway. The piercing pattern, more than halfway. And the engulfing pattern engulfed the whole candle body. So you see what's happening here is that the reversals are just moving further into the prior candle's range. The essence of this is we're talking about retracements, and we'll get into that into another section. And here the bearish versions, the shooting star, what we would call a topping tail, Haramai, an inside bar, the thrust less than halfway, it had gapped up, and that tells us that momentum slowed down. There was some penetration into the prior candle, and possibly things could move to the downside. But as you'll see, we have to put this in the context of the trend and support and resistance. That's where the powerful concepts come together. The piercing pattern just moves further into the prior green candle. So as prices move further or deeper into the prior candle, we say that the signals are becoming more potent. And then the bearish engulfing. It engulfs the prior candle body. However, the way that this is drawn, let's just get a little pen out here. It's actually not only engulfing the body, it's engulfing the whole candle. So that's a pretty powerful signal. As you'll see as we look at these, where it gapped above the high and then came all the way back down and closed below the low. Now, when we put this picture in the context of a downtrend and potentially what's to the left, that resistance, you'll see how powerful these signals can be and how right you can be that prices will actually move to the downside. Let's move on to the next. Candlesticks and bar by bar, part 2. Using candlesticks like a master trader, let's realize that the battlefield of supply and demand starts in one candle. And it speaks to us about that supply and demand and what other traders are doing. And we finally call this candle language as those individual candles begin to form patterns and communicate to us what's happening in the moment. Of course, we want to combine this with other master trader concepts to increase our odds of finding successful trading and investing opportunities. So determining who won the battle, let's take a look at the individual components of one candle. And that is comprised of, let me just get my highlighter here. One second, please. Yeah, that's better. We have the high, right? We have the high of each individual candle. We've got the low, it's marked, and that could be marked by a small tail or wick, as it's called. However, the opening price here, let's just stay with the bullish candle where the bulls won. The opening price as this is drawn is just above the low. However, the open could be at the low, the same as the close could be at the high, and then we would have a completely green candle without these little wicks or tails. So you can color these on your charting platform as you wish, of course, but these are the common colors. Green for a closing price above the open, and red for a closing price below the open. So as we see these candles beginning to form, we look to see, are they red, are they green? Did prices close above or below the prior bar's close, above or below the prior bar's high, or in a downtrend, does it close below the prior bar's low? And that continues on and on and on and on. As we look at these individual candles, one of the concepts to keep things very simple is recognizing slowing momentum. So these first candles, the green one here, obviously that's not slowing momentum. That's how, momentum had been increasing. It's a larger candle. Now, of course, you don't see what was preceding that, but let's just go with that for a moment. And the assumption is that there was momentum increasing at that time. Now, as we look at these individual candles, as we covered in part 1, they have different names. Shooting stars or hammers or inverted hammers and such, spinning tops, none of that matters to us. At this point, I just want you to focus on the fact that if it's a small candle body or a narrow body, the momentum is slowing. It's that simple. And so with these green ones, that means that the closing price was above the open. In any event, momentum slowed. And the red ones closed below the open. Tail on the top and the bottom, tail on the bottom, and a little narrow range body. So, repeating, small candle bodies tell us that momentum is slowing. We're then going to have to put that in the context of what preceded it and where it's happening to really make that meaningful in some way. Moving on, the candles that we're looking at, we're going to determine they're either wide range, they're narrow range, did they close above the open? Did they close below the open? Do they have tails? Are the tails on the top or on the tails on the bottom? So a green candle, like we have right here, could eventually look like a topping tail candle. A red candle could eventually look like a bottoming tail candle. Now, just to keep things in perspective and the way this is actually drawn here, this candle to look like this green one, prices would have had to have rallied then above this high point, because look at where the high is here, and the close. Close is above the opening price, and we have a green candle. So the close on this red candle, the open would have been here, the close would have been down here. Right? So to turn it into a candle that looks like this, it had to get beyond that opening price and turn the candle green. So here's a smaller one. So bottoming tail, but one obviously larger, one smaller. The significance of that is that topping and bottoming tail bars can also be range expansion bars. What does that mean? Well, as it means is that you're having a wider range bar after a series of, let's say, normal or smaller range bars. So as those bars increase in size, so are the emotions of traders, whether that's fear or greed, we'll get into that, that's happening in that moment. So as that range expands, it gives us some great information to suggest a possible turning point. So if prices were coming down and we see a larger green candle, things are getting quite emotional, and then it becomes a bottoming tail candle. That's a very powerful signal that we're going to pay very close attention to. As we talk about, others talk about different candle names, right? Let's simplify all of this to take the mystery or hype out of candlesticks. Now, we can change the look of a candlestick pattern by changing the time frame that we're looking at. And this is where we come back to retracements being a very powerful concept. So one candle, prices had been going down, and they pushed back up again. So this is really a matter of expanding data in that time frame changes the number of candles. Retracements, right? You see the names, they're really irrelevant. As we were to expand the data from this one candle, and don't worry about how we're expanding it or what time frame, it doesn't matter right now. It's just about understanding the concept. As we expand it, we're breaking that data into two candles. Prices went down, and they came all the way back up again. So we've got a two candle reversal. As we expand the data a little further, we have three candles going back down, momentum stalls, we go all the way back up again. Now, in candle terms, this would be called I believe, a morning star. If I'm misquoting that, it's because I really don't pay much attention to it, but I have read the books from many years ago, and I think that would be the name. So there's morning stars, there's doji stars, and such. Doji being a bar that with the open and close the same. This one, it's a little separated from the open and close. In any event, this is really about just expanding data. So as we look at this, and whatever the time frame that we are looking at it, it just means that prices went down and prices retraced all the way back up again. And the most important thing is the location. Where did it happen? And what is the trend? Right? It's just hype. Think like a master trader. Don't think about what's written in books, to hype up the fact of these candles and the names and such. We want to keep things simple. We will approach every technical concept from that point of view. We have prices having moved up, and moving far away from this moving average. And the further it gets away from that moving average, and the further it gets away from any price reference point, the greater the probability of a pullback. So as the size and number of candles over time increases, that increases the potency of the candle. So as we're seeing that momentum slow down and began to turn. Now, the odds of the pullback is really related to the extension prices are on a multiple bar move up, extended from support. The moving average is a visual aid, which we'll be talking about in depth. So as time goes by, and this is time as this relates to one time frame that we would be looking at, the more candles that there are, the more time that has gone by. So let's just relate this for a moment to, well, we can relate it to days or intraday, and this would be 2 days, 2 days, 2 days, 3 days, and so on. If it was a 5-minute chart, 10 minutes, so on and so on, 15 minutes. The point is, as time goes by, there is more interaction between buyers and sellers, and prices become more evident to everyone as to what's happening over time, and the size of the candles increases the potency. So as we look at these candles, let's think about the opens and closes as well. Whereas the closing price and this open are the same. Here prices gapped up. Here prices had moved higher and then back down again, closing below the open. Prices gapped up a little bit and then traveled back down under the low, and prices moved up a topping tail and then right back down again. So wider range bars, right? Wide range bars. And we want to consider these candles' effects on emotions. I spoke about that a little bit. And we're beginning to think in candle language. So as already mentioned, we have narrow ranges, wide ranges. We've got range expansion, bottoming tails, range expansion, topping tails. So a narrow range bar, we'll call that an NRB, after a move indicates momentum has slowed. Wider range bars, right, they're getting larger, displays commitment and emotion. And we're getting into some powerful stuff here, and wait until we start putting it all together. So a wide range bar is a range expansion bar, RE, by definition. A bottoming tail or a topping tail, it may or may not be. As I explained, if it is, that's going to be a powerful signal. Wide range bars can end a move after multiple bars moving in one direction. Wide range bars on a breakout or a breakdown, right, after a consolidation, those ignite a move. Now, when you think of a breakout or a breakdown, right, as most of us would, right, we think about, a sideways move, and then on a breakdown would just be a wide range bar down. But let's not get caught up into exactness like that. Right? Because as traders, we have to be flexible. So a consolidation could be something that looks, like this, where it's been going sideways for a while. And then you get the wide range bar. It doesn't have to be what we would call tight. We'll just keep that in mind as we go ahead and we actually look at the actual charts. So looking at wide range bars and potent reversals, we want to consider the effects on emotions. Again, we're thinking in candle language. So this is a very potent reversal. Red candle gaps actually up a little bit and all the way back up. So you could think of that as an engulfing type of bar. And it doesn't actually meet the exact definition because it doesn't engulf this candle body. But again, I'm trying to move you away from those terms and exactness of them. As you look at this 2-candle reversal, it's obvious that it's a powerful reversal. The green candle is so much bigger than the red. It's well over the top of it. So we call that a potent reversal. Simple. We say, well, this one, it's not that potent. It's just a small candle in relation to the big red candle. So we're looking at the depth of retracement into the prior candle. Now the ones on the right here, we'll say that that's potent. This gap down from a green candle. We've covered the opens and closes. So it opened here. It closed up here. It looks wide, just the way it's drawn. We can't see what preceded it, but let's just go with the idea of it being wide. And then prices gap down near the low. Now this one we say it's not potent. And you're probably looking at that and thinking, why isn't that potent? Because that's a pretty darn big red candle there. Well, we say it's not really potent because it didn't retrace, right? The depth of retracement into the prior candle isn't far at all. It basically closed here where the prior bar closed. So if we were to look at this, let me just get my little pen out here. If we were to look at this and turn this into a line chart, and this is why you have some investors and traders, they really like to keep things very, very simple, and they don't even want to consider a candle or think about that. That's okay. But what I want you to understand here is that prices were going up and they went sideways. That's all they did. And that is why we say this is not potent. Although it gapped up, and it certainly would increase the uncertainty of follow through to this red candle. Many times, and you'll see this as we look at charts, as prices are moving up and then they gap higher, that'll be sold into because of profit taking. And if prices are in an uptrend, many times this pulls back a little bit and then eventually the uptrend continues. Now, our examples on the bottom here. Prices were moving down, and then we see the ranges beginning to expand till we get to a wide range bar. And we view that as becoming somewhat climactic and the probability of this move down ending. It doesn't necessarily mean the trend is over, but it means in the moment of the time frame that we're looking at, the move is probably going to at least stall and possibly reverse. We need more information. Whereas this example, we say the wide range bar is igniting. And remember, we want to see that from a small consolidation, or could even be a larger one or a base. But then as prices come down and momentum begins to slow, we say, well, there isn't a lot of fear related to that. Momentum is just slowing. And these tend to be good opportunities as prices retrace, where sell setups will form at some level of retracement. And then we would look for individual candles to form where they turn back down again, which could look like this, right? And then followed by a red bar back down. It could happen in numerous ways, many ways. Prices could reverse. So we're not caught up into, as I said, the individual names. We're going to look at individual candles and we're going to put them together. So in this example, wide range bar is igniting a move to the upside, and then momentum begins to slow. And we say that greed is not extreme. Remember, the markets move based on supply, demand, and emotions, fear and greed. So as prices are moving higher, momentum begins to slow. Well, traders might be becoming a little apprehensive about continuing to buy here, and that sets up a pullback where we would want to buy, assuming this is an uptrend. And again, let's assume that this started from a consolidation, some type of corrective price action here, wide range bar igniting, prices pushed up. We want to be a buyer of this pattern when it pulls back or possibly even consolidates to then continue to the upside. In our example here, prices were moving up, and then we get a wide range bar. We say, well, greed is increasing. We can say that the Johnny-come-latelys have jumped on board here after it's becoming very obvious that prices are moving up. And this tells us that this move is near over. So we have to combine other concepts here before we were going to take action, but we are looking at what's happening here in that moment, which creates the thought that this move is about over. Then the other questions come to mind that guide us as master traders. What is the trend? What is the location of this happening? For an intraday trader, it could be what time of day it is. So there are a lot of other concepts that we're going to be looking at here. But now you've gotten the foundational information to guide your thoughts with candlesticks. All right, let's move on to part number 3. Candlesticks and bar by bar, part 3. These are the 3 candle concepts of what can be happening. Momentum slows, it's increasing or reversing. Price can only do one of the 3 at a time. But It can form in many different ways and look different. The trend of prices, as I've already said, is a key factor to candles' messages. And the location of where any of the three is happening is another factor. Then the concept of, does it follow through or not? Right? No follow through can be a powerful message as well. These are what we call red bar ignores or green bar ignored. So let's look at a few chart examples. They say at times the pattern can have no follow through, the acronym being NFT to suggest their meaning. So as we look at these, and we see red bar ignored many times, this is exactly what should happen, but the fact that it did not follow through, or in this case, the red bar ignored, is confirmation of what our expectation is. Meaning, if this was in an uptrend, or this was in an area of support, and we were anticipating a reversal at that time, right, we should see a red bar ignored. In this case, we've got a bottoming tail bar after it, but it could be a green bar that turns around. It could be opening right here. It could gap down and be a green bar back up. Remember the concept of 1 or 2 or 3 bar reversals, about the fact that data can be expanded or contracted, and it changes the message. And it's about retracements. So here we've got a red bar moving down and the bottoming tail bar telling us that buyers are stepping up at that time. Notice here this wide range bar. This is a bit unusual. We don't know what preceded it or what's to the left over here. But what I would point out here, and we'll be looking at other concepts like this, just by the amount of data that we could see, this was actually a wide range bar igniting. Again, I don't know, and we don't know what's over to the left here. It could have been igniting into an area of resistance, and this could have been in a downtrend. But just looking at what we have here to look at, this would be a wide range bar igniting, and then we have this topping tail, which could have been no follow through to that, but as you can see, it did follow through to the downside. So here now we have a bullish engulfing that became a green bar ignored, and prices went all the way back down. So clearly, as we start to look at this unfold, the assuming bullish pattern that we had here and this move up is quickly evaporating and turning into a more bearish chart pattern. As prices moved down and came down to test this area, they did bounce back up. Notice the small topping tail and then the reversal right here. And as we start to look at more and more of these patterns, you'll come to see that this is actually a high probability sell setup on this retest of the topping tail and then this 2-bar reversal. As prices move down again, they're in a downtrend, and they try to move back up and turn down and so on and further back down. And this is where we start combining other concepts of trend, support, resistance. And then, is this going to be a red bar ignored here as this begins to consolidate here? Obviously, we just don't know yet. Potent reversals. Prices were moving up. We looked at these before in the prior section, and here's a big red bar. Is that potent based on what we talked about? No. Right? Although it gapped up, it didn't penetrate deeply into the prior candle. So we say, no, that's not potent, even though it's a big red bar. Now that's potent. Look at the depth of retracement there. And this begins to tell us that buyers are in control. Prices move up. We just continue the analysis, and eventually we'll get into how do we read all of these individual candles. Bottoming tail bar. What was that prior to completion? I like to look at candles that way, or talk about that with students, because it kind of drives home what actually happened here. Right? That was a big, red, ugly candle, suggesting that prices would move down prior to completion. And then it becomes a bottoming tail bar. And this is one of the reasons why you don't trade bearish candles in a strong uptrend. They should be ignored. And so we wait for further confirmation if prices are actually turning. And we say slowing momentum here. And you see the candle body, how small it is, and the range beginning to contract. And that's happening right near the prior high. So we say momentum is beginning to slow down. And lastly, bullish candles get the respect in an uptrend. In other words, we take an individual candle, whether it's bullish or bearish, and we have to put it within the context of the big picture, that being up. All right, some more examples here. Here's a bottoming tail bar. I'm going to say there's no follow-through. We don't know that there won't be any follow-through until a little later. Sometimes it's immediate on the next candle, but we really don't know that there won't be follow-through to this bottoming tail candle until later on here. And then the green bar ignored, and then here you got a wide range bar igniting to the downside. And based on that price, this green bar should be ignored. And then we see it does, and then as prices begin to evolve, right, we see a reversal happen here on this retest and a wide range bar up. And as we get into support and resistance, you'll be looking over to the left, and we'll be looking at multiple time frames. So as you look at charts, one of the suggestions or tips would be for you to question, as you're looking at your charts in real time, if you see this kind of a pattern forming, ask yourself, why did that happen? You might not see it in the moment, but the question will have you looking for the evidence, and it helps to reinforce the concepts that we are talking about here. Why something happened? Why should it happen? Uptrend, support, creating support, all the things we'll be talking about soon. So a wide range bar igniting. Bullish candles get the respect in an uptrend. Right? This red bar should be ignored. Up, topping tail, no follow through. There shouldn't be follow through after prices have moved up in this way. And so when you have a topping tail followed by a bottoming tail, you give the respect to the bottoming tail. And prices should continue to move up. Red bar is ignored. That is your bullish trend confirmation. We talked about the emotions of these candles. So as fear and greed increase, ranges expand. Wide range bars. As it decreases, the ranges or bodies begin to contract. So here, momentum increases, it slows and reverses. As prices begin to move down, here's a bottoming tail candle. We have a little bit of evidence of what's to the left here. And then we have a bounce back up. And as prices turn back down again, then we see the range beginning to turn back down, and the range expands as it breaks lower. And then as the range expands even further, we don't want a short-term basis. We're probably close to at least this move down stalling. We really have no idea that it could turn into this just based on the information that we have. But let's just go with what's happening here and looking at these individual candles as it relates to what preceded them. So as momentum begins to slow, those candle bodies are contracting, and then we get a bottoming tail candle right here. And notice how these two prior candles are going sideways, and it breaks below the low here. As we get into multiple time frames, we'll talk about how this is a small breakdown failure in a smaller time frame. And prices are moving back up. And so we have buyers starting to take control here, but prices just move down very sharply. And this is not something that we would be interested in buying based on the information that we have available to us here on this slide. But then once prices come down and they retest it, and notice again, breaking down under the low and immediately reversing again, buyers are beginning to step up. And then taking out the highs, this strongly suggests a move higher. Right? So we've taken out this resistance area here. And then we just continue with the analysis. So once our bias changes from down to sideways to turning back up, we then continue our analysis looking at these individual candles. As we look at this, Let's just highlight this area right here, which we're going to talk a lot about when we get into support and resistance. As this comes into this area right here, we then look at the price action, the individual candles that form. And when this big red candle forms in this area of resistance, of course it suggests a move to the downside. However, look at the potent reversal as it turns back up again. Remember the concept of 2 bars versus 1 bar. What does this look like if we condensed the data? Down and up. Right. It's a bottoming tail bar. And bottoming tail bars have I shouldn't say the bottoming tail bar does, but as us that are looking at these patterns, our eye, for most of us, tends to gravitate toward the bottoming tail bar or the topping tail bar versus the 2 bar reversal. They mean the same thing. So as you look at this and train your eye as to what you're seeing there, begin to think along those lines that this 2 bar reversal is the same thing as the bottoming tail bar, and it's a powerful signal, and especially when prices tried to go down in the face of this resistance and turn right back up again, and it was preceded by a wide range bar and a wide range bar. So we had a consolidation at an area of resistance. Notice the topping tail bar doesn't follow through, back up again, and another consolidation near the prior high, and then it continues back up. So as we're looking at the price action here, we're getting additional confirmation of this turn that occurred down here. So here, move down, another retest pattern, a bottoming tail bar. That's also a range expansion. Remember I told you how powerful those was. Think about what this looked like prior to becoming a bottoming tail bar. Here was a little sell setup in the area of resistance, and as it came down to this low, buyers stepped up in a big way and pushed it all the way back up again. Very strong signal. And then a wide range bar igniting. We see a continuation right here, a little continuation pattern, wide range bar up, bottoming tail bar, and just continuing higher. And now here's a bearish wide range bar. And this has been trending up for a while. And notice I don't have any time frame on here because I want you to think along the lines of whatever the time frame you're looking at, this is how you would interpret it. And topping tail bars, and there's no follow through, a bottoming tail bar. And so you have signs of distribution here and sellers coming in, but there's no follow through. So the pattern continues to be bullish, and we now have to consider other concepts. Where's the trend? What's multiple time frames? Is there resistance here? All of that begins to give us additional information that would guide us to why this is not following through. Well, pointing out here, we talked about indicators and overbought and oversold. And at this point, some indicator would be saying, hey, this is becoming overbought. Well, is it overbought here? You can see how the concept is really misleading. Overbought based on indicators doesn't mean anything, because what's overbought can become more overbought and more overbought. It's about what is to the left. We'll be getting to that. Right? You ready to throw away your indicators? I think yes. Right? This is what works. Indicators confuse. Bearish candles get the risk in a downtrend. And here's a breakdown. Green bars being ignored. And look at this move down here. And here's the wider range bar. Momentum slows down. And it can't bounce. This is a bearish signal. When prices move down multiple bars in a row, momentum slows. It only does it for one reason. Buyers are starting to take control. And it can't bounce. That's bearish when it goes sideways there. And then it breaks again. Wide range bar igniting. You've got topping tails. Note this 2-bar reversal. That 180, bearish 180. Same as a topping tail. Now, if you saw this as a topping tail, especially moving up above these highs here, you'd probably be willing to sell this short, looking for a move lower. Now, looking at these 2-bar reversals and knowing it's the same thing, you'd be willing to take the same price action. Moving down, little bottoming tail bar here. Still in a downtrend, going sideways. It can't bounce, should be going lower. You're saying, oh, what happened here? Immediate reversal. Look at the range expansion. It reversed back up. Bottoming tail bar, range expansion, bottoming tail bar. If we put these bars together, right, absolutely, look like a bottoming tail bar and a range expansion on a retest. Let me think, what is to the left over there? Why is this happening? Is a higher time frame and an uptrend? We're starting to put things together, but we've got a lot more work to do. Trend is down here, but has begun to reverse and has taken out this little area of resistance. Some thoughts on candles. Attempting to define the accuracy with names. I think at this point I've convinced you that it's not necessary. Right, we want to look at what matters. Trend, support, and resistance. There has to be at least 50 different candle names, whether bullish or bearish. As mentioned, a lot of traders and investors try to memorize them because that's what they're told to do or what they need to do. It's unnecessary. Right? These are good visual signals. The ones that don't work are often the most powerful. All we need is a chart with price bars. All this is secondary. We will get to volume, and I know you're probably thinking that, but it is secondary. Analysis tools, they give you other information. They can only follow what price action is doing. Let's move on to bar by bar and section number 4. In our last chapter for candles, we'll go through an exercise for bar by bar analysis, or what some of my previous students have coined candle by candle. Well, candle language, as we've already spoke about, is about proper thinking. And that thinking is about the patterns that have been created by the expectations and actions of other traders. And each candle provides us a picture of those expectations on an ongoing basis. And as I said, we call this candle language. So as we go through this exercise, and we'll go through these individual candles here, as we look at them, as if each one of these is a separate situation and how it would produce different thoughts and how we might react to that. So in the first example, it's pushing up here, the wider range bar, and then we get another green candle. The range is contracted a bit. It's backed off from the high a little bit, but we'd say everything's very good, nice. We're expecting prices to continue to go higher. Now let's change that last green candle for this one right here. And as we say, it's a red candle. It closed below the opening price. We say it's okay. Just momentum is stalled a little bit. We've got tails on the top of the bottom. A bit of indecision that's happening right there, but it's still okay. Nothing wrong. The next one, we say, well, that's not bad. It gapped up, which we know typically will bring in some profit taking after a green wide range bar. How far did it retrace into the prior green bar? Well, less than halfway. Not a problem. Let's see what the next candle might do from there. Now, in this one here, prices gap down under the closing price. It closed under the open, but still it's above the halfway point of that bar. Still looks okay, and we're going to wait for the next candle to form to change our decisions as to what might be happening here. Now the next one, clearly say that's trouble. A wide range bar, and the next one gaps down more than halfway and not too far from the prior opening price of that green candle. Prices close below the open and even below the low of this wide range bar. Clearly a signal that prices are going to go lower. Now the last one here gapped down, and we've got a big wide red candle to the downside, closing under the 2 bars lows. Let me say here, run for your life. There are stupid people everywhere. meaning this is going to go lower. It's is the most convincing of the examples that we have here that prices are going to go lower. So we continue this process. So even if, let's just take this one here that is closing the most bearish, and let's assume for the moment that it's a daily time frame. Well, what if it gapped up above this candle's high and the next candle closed below the open? It would be an extremely powerful signal, and I'm not suggesting that you should think that at this point in time, right? Because this is saying it's going to go lower. But the point is, based on bar by bar analysis, if the next bar was to do that, it would be extremely, extremely bullish. And that might happen in the context of a powerful bullish uptrend. Okay? So as we covered in the other sections, in an uptrend, and in a bullish uptrend, the bullish candles get the respect, whereas the bearish candles less so, or maybe not at all, or very little. Let's go through these candles as they formed here, as they were moving down. And we see some stabilization, slowing momentum, and a green candle. As prices are moving down, as mentioned, well, here the bullish candles get less respect. And here is a pretty big red candle, bearish candle, pushing lower. And then another bottoming tail bar. Well, not another, but a bottoming tail bar. Slowing momentum, and another move up. Down again. Look at the range here beginning to contract, and a bottoming tail bar. Now, ignoring this for the moment, as we see these sections, right, we're talking bar by bar, but let's start putting them together, a collection of these candles together. And as we see prices moving down, clearly buyers are stepping up, but unable to overcome the prior resistance areas until here, where you have a wide range bar to the upside that has cleared the prior high, or what we've called an igniting bar, and then another wide range bar to the upside. Closing up near the highs, momentum begins to slow in the area of this prior high. Normal. A topping tail bar, topping tail candle. So the message here is that prices might move lower. Again, we have to put this in the context of what preceded it. So we're going to give this a little less respect. It is a range expansion compared to these two topping tail bars. So it's not that it's a totally benign type of topping tail, and it is in the area of a prior high. So the topping tail alone is not a reason to take a short position, especially in light of what preceded it. So this candle's message can be ignored completely. And it should have been, based on the fact that this started with two bullish wide range bars igniting the move higher. So here was the gap up, then it continued to move up. Momentum stalls and then begins to move sideways in what we would call creating some support. As long as it can continue to move up, it certainly could have pulled back a little bit, but it never violated any of these candles' lows. So that was bullish. Then at D, right, it moves to a new high, closes back inside of the range. That indicates some weakness since we have a new high failure or a mini breakout bar failure there. And then E, we have the first break and close below this little sideways range there. So as it's beginning to move sideways and may move lower, we need more information. Now here's what happened. At F, the candle closes is just less than halfway into the prior red candle. The beginning of a red bar ignored, and then that continues until it retraces all the way back up to the top of that bearish wide range bar. And then at G, we get a topping tail that forms in the area of the prior high. That's where there's some sellers. At H, we get a potent engulfing candle that forms in an area of resistance. So the message here is that selling is increasing. This may be a pause in the move. We're uncertain at this point whether this is beginning to build a new area of support that prices could then move higher from there, or whether this turns into a little M top or double top and prices pull back into this area here. We don't know. That's why it's uncertain. So we let the candles guide our thoughts. And when we get into the money management section, of course, we're going to add rules on how to manage this. So take a moment and look through this chart, starting from the left to right. I want you to recognize slowing momentum, a potent reversal, 3-bar reversal, same as a bottoming tail bar. I think this has to do with retracements, wide range bar igniting, ending, a bearish wide range bar ending, and a potent reversal. And here I have them marked for you. And so here's our slowing momentum after a move up. And notice, well, I didn't ask you to look at that. You can see that the range begins to expand here, and notice the small topping tail right there. Clearly evidence that sellers are starting to take control, but that doesn't tell us that we should be thinking about shorting, but possibly taking some profits. And rather than pulling back, it goes sideways and begins to build a little area of support, and then moving higher. And here we get a little shock pattern right there, where this was a bullish consolidation after the wide range bar, and as prices moved up, then gap down, right? This bearish bar, potent reversal, back down again. However, it begins to build support. We're going to talk about this in the next support and resistance section. It wasn't an uptrend, so it isn't out of the realm of possibilities, of course, or that shocking, if you will, as to the fact that it didn't pull back, but prices moved back up. Now, we're going to talk about this type of a pattern as well, meaning this sideways consolidation in the area of resistance. Very bullish to go sideways like that. And notice this little top bottoming tail right here. And what I want you to notice about that is the fact that it traded under the prior candle's low and then came right back up again. Tells us that there is buyers lurking underneath, waiting to pick up shares and then pushing it right back up again. And here we have that push up, and momentum slows. It pulls back a little bit toward the support, reverses back up. So here's your 3-bar reversal, red bar down, green bar, and right back up again. It's about retracements, as we've covered. Down and right back up again. Then a little slowing momentum, consolidation. Number 4, wide range bar igniting out of this little base here. And as it continued higher, the wide range bar ending. Of course, we're looking at this after the fact. However, this move up and this wide range bar is what that would communicate. Not necessarily a pullback of this extent, but a slowing of momentum and possibly a correction, which could have been sideways. But this tells us that it's a little bit too much, too fast, and it should correct a bit. And then as it pulls back, we get a wide range bar, potentially ending a move right into this area of support. And buyers come in, and then here, the big shock. Right? A big shock and a potential move to the downside that would start on that gap down. Very potent gap reversal, which we'll cover these extensively in the gap section. Once that happens, breaking through that support, you have a bearish bias. It's a little bit of support here and then nothing below, which suggests it's going to continue to go down. So every candle pattern is producing thoughts. Once you've learned the pattern, it suggests a future result. That's what pattern recognition is about, and it produces expectations for that result. It could lead to failure when it comes to technical trading if they are not kept in alignment with current patterns. So we need a method that updates information as it occurs. Your expectations of that, what happened in the past, will get stuck there. So the bar-by-bar analysis is the master trader's tool that keeps you in the present. So here you've learned individual candles. We've put individual candles together into smaller patterns. We've concluded with bar-by-bar analysis, and we're now going to take that information and we're going to use it with support and resistance. Let's go ahead.